Hello and welcome. You're watching Earnings Edge right here at NDTV Profit. I'm your host Puneet Zaveri. We're now going to be speaking with Finolex Industries, and they're buzzing on the back of strong quarter four earnings, where the company revenue grew by roughly 8%, coming at roughly 1235 crores, while on EBITDA and PAT it was just slightly subdued at just down 3% and 0.9% respectively. We're now joined by the MD, Mr. Ajit Venkataraman of Finolex Industries. Good afternoon, sir, and thank you so much for joining us here at NDTV Profit today.
Good afternoon, Puneet.
I just wanted to just start off with the PNF margins. Firstly, I think we've seen them come a little higher by roughly 300 basis points compared to the previous year. How do you see these margins shaping up for the next fiscal, and what kind of range are you maintaining? Do you see that these might go up to roughly 12 to 13%, or will they be somewhere around the current range of roughly 11%?
Uh, Thanks for the question, Puneet. See, the margins are going to be a large extent dependent upon the PVC price movement. Currently, for the last 2 quarters, they have been fairly steady, and therefore, if you the parameters which we track is the EBIT per kg, which has improved significantly with respect to last year. Last year, it was in the range of about 5 rupees, whereas right now it has reached about 13 rupees per kg. So, I'm sorry, 12 rupees per kg. So, this has been a significant movement. And also, it is on the back of a significant growth in the pipes and fittings segment, which is we have seen a volume growth of about 11%.
God, sir.
and,
And
and it's
yeah.
also dependent upon the product mix. And as we go along, our focus has been on the non-agri segment. And when the more non-agri segment contributes to the overall revenue, the margins should be improving.
Understood, sir. And currently, I think your agri to non-agri split is roughly around the 63 to 64%, if I'm correct.
That's right.
Where do you see this going forward in the next couple of years? Slightly long-term question, I think, because you have been saying that you want to increase the non-agri share. So I think this will be dependent on how the construction and the real estate industry also performs, as well as on any kind of, the project basis that the company takes on. So I just wanted to first know the split as well as any kind of outlook that you have on the non-agri side, sir.
See, we are fairly strong in the agri segment, and the agri segment we expect it to grow in the upper single digits. Whereas in the non-agri segment, which is the plumbing and sanitation segment, this segment is likely to have a CAGR of almost 15% for the next 5 years. So that's an area where we expect the growth to happen, and therefore our mix, which we are aiming for in the next 4 to 5 years, is a 50-50 split.
50-50 split over the next, that's quite a sizable shift from the current revenue mix, and surely definitely will aid the margins as well. I wanted to come into your role as well before we get into more of the business questions. I think you joined roughly sometime mid of last year. How has the transition been? Has the company also had some changes within personnel or any kind of story that you might have wanted to change within the firm? Can you guide us through that, sir?
So I joined about in August of 22. So it's a little more than 1.5 years now. We have a good senior management team, and we have experts from in all the segments, and we have people joining us from various industries, and therefore bringing about a lot of cross pollination of ideas within the organization. And therefore, right now we have a complete team, and we have set out a very aggressive path for the future.
Got it, sir. And for the resin revenue per se, I think for the full financial year of 24, we definitely saw it come down compared to the last year. Was it just on the kind of price fall that the resin revenue has seen? Is that the reason?
There were two contributing factors. One definitely is the price of PVC, and the second has been that we had some supply chain issues with one of our key suppliers, and therefore there was an issue with raw material availability. And this has been sorted, and therefore, for the last quarter, for example, we have seen a fairly decent 20% growth in terms of volume compared to Q4 of FY23. And this, we believe, is going to be behind us. But we are constantly watching what is going on in the Middle East because that can cause a little bit of turbulence.
Yeah, that exactly gets me to the next question, sir, on commodity prices because of geopolitical issues that we've seen. We've also seen the commodity prices of other industries also affected. How do you see this shaping up for the near term, for the next 1 to 2 quarters? I know it'll be difficult to kind of quantify it, but how do you see this going forward?
See, last 2 quarters have been fairly stable, and stable PVC prices means a lot more steady growth for the industry. So it's a wait and watch at this point of time. We hope that the stability in the last 2 quarters continue forward.
And so I wanted to talk about the capex intensity. I think could you guide us on what kind of capex the company do in this particular year, and what's the outlook for financial year of 25?
So we have 150 crores of capex outlay, which is a combination of incremental capacity addition as well as maintenance capex. So this is something which is a steady state for us, and any further expansion or expansion plans will be on top of this.
And currently, is the company evaluating any kind of increase in the current capacity? Because also, if you could like tell us, I think the current capacity is roughly around the 470,000 million tons. Uh, what kind of utilization has the company seen, and do you see any kind of incremental capex to increase the capacity going forward?
So we are at about 70% capacity utilization. And yes, you're right. We have our total pipes and fitting capacity is 470,000 tons. And given the growth rate which we are anticipating, we definitely will need additional capacity. But our current plants will be capable of taking modular increases as well. So we are considering both.
And could you also update us on the fittings capacity? I think separately, the company had in 2023 commercialized this facility. How much is it currently, and how much is the current utilization of that as well? And going forward, would you want to increase that as well?
See, we set up a new fittings plant in March of 23, and we are nearing the rated capacity at this point of time. But this plant also has capability to take more machines, more molding machines, and therefore we can increase the capacity in the existing facility itself. Our total fittings capacity is about 48,000 tons.
Understood, sir. And we did speak about commodities briefly. You did mention about what you see going forward in the short term as well. Is that overall on the PVC, EDC as well as the VCM prices? Or do you see one of these being kind of like in a tough spot? Because we've seen PVC prices remain largely stable this year compared to the previous year. But amongst these, because these are the key raw materials for the company, do you see any kind of movement in these currently?
See, we have seen the PVC EDC delta drop down to almost $427, and the PVC VCM delta dropped to almost about 135, $140. So these are about the lows which we have seen, and we hope that these deltas would increase going forward.
And I wanted to just talk about the current working capital as well as the receivable days. I think they're slightly on the higher side for this particular quarter. How do you see the momentum going forward for the next 1 to 2 quarters on this? Do you see these coming down? And also on the current credit that you're giving to your customers, is that in the historical range of roughly the 30 to 60 days?
That's correct. It's the current credit period is anywhere between 30 and 60 days. And as you will see, the way things have been, the agri segment is more of a cash and carry segment, whereas the non-agri segment, which we are putting a lot of emphasis to grow, that is much more of a credit segment. as the non-agri segment grows, you're likely to see a little bit of an uptick in terms of credit.
Yeah, got it, sir. And I wanted to also just finally talk about the competitive intensity currently. How are you seeing the competitive intensity in both agri as well as non-agri segment? Because we've seen a lot of players also in the listed space who are there. How are you seeing that on competitive intensity in general as well as on pricing, sir?
So there has been a lot of price wars in the market,
Yeah.
and it has been fairly intense over the last couple of quarters.
Right, sir. And finally, my last question here. You have a current cash balance of roughly, if I'm right, 1,800 crores. How are you seeing this going forward into this particular financial year? Is that the level that the company is going to maintain? And because we've seen that the company has also announced a dividend this year, you've spoken about the capex intensity also going forward of roughly 150 crores, and any kind of increase in capacity would be over and above that. What kind of cash level is the company going to maintain going forward?
See, we are looking at expansion in the next couple of years, and that will need us about 300 to 400 crores in terms of capacity expansion. And the remaining money, we will be returning it back to the shareholders.
Understood, sir. Thank you so much, sir, for joining us today here at NDTV Profit. We look forward to our next chat very soon. I hope post our first quarter results or before that on any business update. Thank you so much, sir, for talking so freely today on NDTV Profit at Earnings Edge, sir. Thank you so much.
Thank you. Thank you very much.
Well, it's time to slip into a short break, but do stay tuned. We have lots more here lined up on the other side.